At my home, sir, in Kerala.
Kerala, which place? Ernakulam.
No, I'm from Alapi district. I'm from a small town called Chenganur.
Chenganur. Okay, I am aware of. Yes, Aneesh, you are integrated MA. Integrated MA means what in IIT Madras?
Sir, it will be a 5-year program.
Mm-hmm.
So in the first 2 years, it is common. So you will be taught some basic subjects in social science, almost like an introduction to economics, international
Mm-hmm.
relations, etc. And from third year onwards, you can choose your specialization.
Mm-hmm.
So you can either go to development studies with
Mm-hmm.
a minor in economics, or you can choose English studies. So based on your
Mm-hmm.
interest, you can choose either of these two.
So it's a 5-year course. Okay, you
Yes, sir.
finished in 2021. After 2021, you worked somewhere. That is
Sure.
Takshashila Institution. What is that the job work? The profile of the job?
So, sir, Takshashila is a independently networked think tank based out of Bangalore.
Mm-hmm.
So, inside Takshashila, they have other verticals as well, research, they have an advocacy division, etc. But along with that, they have a policy school. So, policy school conducts 3 month certificate programs, graduate certificate programs in multiple domains, out of
Okay.
which the
Why
one I
did
was
you? Okay, you left after 6 months or something, or 9 months?
10 months, sir.
Okay, so 6 to March. Okay, that's fine. Now, why RBI? Why do you want to join RBI?
Sir, throughout from almost from my 12th standard, from my school days, I was very passionate about development,
Mm,
specifically economic development. So
mm,
that is the reason why I even went to IIT Madras. I took my
mm,
minor in economics.
mm,
So even after graduation, so RBI is one of the career choice for some of us. Like two of my seniors are already working in RBI.
mhm,
So I also naturally wanted to work in the same development sector. And
mm.
in India, one of the best places to work in development sector is RBI because RBI directly intervenes in the development sector as well as all the other functions of RBI indirectly supports national economic development.
Okay. What are
So,
the main functions of RBI? Have you seen
so
the RBI website?
yes, sir, I have seen
Mm,
RBI website.
mm,
So RBI is the monetary policy authority in India. It
mm,
determines the policy rates.
mm,
Number two is that RBI regulates the payment and settlement systems in India
mhm,
under the Payments and Settlements Act of 2007. Number
mm,
three is RBI is the currency issuer in India.
mm,
And number four is that RBI works as a development, basically it's a development institution in the sense that it has created several development institutions in India,
mm,
like Nabard, NHP, etc. And in
mm,
addition, it also facilitates a balanced development of the economy through directed credit programs like priority sector lending, etc.
mhm,
And then RBI also develops the forex market in the
mm.
sense that RBI is one of the main participants when it comes to the forex market. It also has to ensure that there is not much exchange rate stability. There is exchange rate stability and there is not much volatility. And number five, and the number six function of RBI is that RBI also is a regulator and supervisor of the financial system because
Mm.
RBI creates regulations for banks, NBFCs, and other financial sector actors. And in addition, it also supervises to these institutions to ensure that there is enough public confidence in the system.
Mhm. What about the basic one function? You talked about for monetary policy authority. Okay,
Yeah.
there is one more basic function is there. Issuer of currency.
Yes, sir. I mentioned that.
Issuer of currency. Did you mention?
Yes, sir. I mentioned that.
Why only RBI can issue the currency?
Because the RBI Act authorizes the RBI Act of 1934 authorizes
Mhm.
RBI to issue currency in certain denominations.
Mm.
So the Act specifically says, I think the Section 24 specifically says that RBI can issue currencies based on from certain denominations from rupees to rupees 10 up to 10,000.
Yeah, Section 22
Yes, Section 20. Section 24, I think, says the denominations. Yeah.
denomination. Section
Yes.
22 is the right to issue currency note,
Yes.
bank note. Okay, it's not a currency note; it is a bank note. Only RBI can. Whether 1 rupee note is a currency note, bank note.
It is not a bank note, but it is the basic monetary unit in India. So that's why it's issued by the government directly, from my understanding.
Mm. No, it is not basic monetary unit. Basic unit is 1 to 5
See,
and all that it goes. That's right. Now 20
so
also added.
what I was trying to
This
say
is
is like,
it is no 1 rupee note is considered to be rupee coin,
yeah,
though it is in note form. Rupee coin it is. Okay, all rupee coins are to be issued only by the government of India
understood,
as per the Indian Coinage Act 2011, the 2000 earlier also. Okay,
understood,
so
sir.
1 rupee note is considered to be rupee coin, and rupee coin is to be issued only by the government. That's why the note also is signed by the Secretary of Ministry of Finance.
Understood.
Yes, Anish, you rightly said it. Now, you said the Reserve Bank is the financial regulator, no, the banking sector regulator. There are other regulators you must be knowing. How
Yes,
many
sir.
regulators are there like that? All India regulators.
There is the PFRDA, there is
Mm.
SEBI, and there is IRDA. So there are overall four, and then there is ITBI, and then there is the fifth one, the International Financial Center Authority.
What
So
is
there are five.
IBBI?
The Insolvency and Bankruptcy Board of
That
India.
is not a regulator.
Okay, sir. So without that, there are four regulators.
4 plus 1, 5.
Okay, sir.
RBI, SEBI, if,
No,
IRDA, and PFRDA,
yeah,
and the IFSCA.
papers.
Okay, these are the 5 people. Why banks need to be regulated? Regulation, supervision, we are talking about now.
Yes, sir.
Why basically? What are the objectives of regulation of the banks?
Uh,
Regulation and supervision.
because, sir, banks need to be regulated because in order to maintain the public confidence in the banking system.
Hmm.
So that because if people lose confidence in the banking system or the financial system, then the
Hmm.
economy cannot develop. So
Hmm.
it will lead
Hmm.
to situations like bank run. People actually even might even stop holding currency, etc.
Okay,
So
okay, that is the foremost objective. Okay, the public confidence in the system, banking system. Any other thing can you think of? Any other
uh,
points?
Sir, it is required to ensure financial stability so that
Hmm.
banks or even NBFCs, by default, they would like to take more risk to ensure to get more profit.
Hmm.
So if they get over leverage, it can create, asset liability mismatches sometimes, or can create bubbles like what happened in the 2008 crisis.
Hmm.
So that is the reason why the finance sector the banks need to be regulated because by default, they would have the incentive to take more risk, but we have to ensure that the profitability motive of the banks is managed well with the public
Hmm.
motive.
Okay, financial stability. So the public confidence and the financial stability,
Stability.
overall financial stability. One more point you have not told me, that is protecting the interest of the depositors.
Okay.
That is the foremost one because the banks are accepting public deposits.
Yes, sir.
That is the working fund for bank. So the interest of protecting the interest of public depositors means, as these are all demand payable on demand. You know these deposits, even the term deposits also payable after some time. So as and when the demand arises, the bank should be in a position to repay the deposits which are taken from the public.
Yes,
So
sir.
protecting the interest of the depositors and keeping the confidence of the people in the banking system at the apex level, no, macro level, the financial stability. Okay. Is there any institutional mechanism to review the financial stability in India?
The Financial Stability Development Council, FSDC,
Mm-hmm.
which is chaired by the Prime Minister, and the subcommittee chaired by the RBI Governor.
Subcommittee is chaired by RBI Governor, but not the Prime Minister.
No, no. I said the main committee is chaired by the Finance Minister
Finance
and the
Minister. Okay.
subcommittee by the RBI Governor.
Very correct. So the committee, the FSDC is chaired by the finance minister, the chairperson. Then all the other regulators are there, and the subcommittee, that is the governor of India, RBI. What is the capital of the Reserve Bank?
Sir,
Paid up capital.
sir, 5 crore rupees.
Mm. Was it the case when it was established, or it is now only
No, it was 50 million from the start,
from the beginning?
from the beginning.
So the 5 crore is the capital. Section 4 of the Reserve Bank of
Yeah.
India Act talks about that. This RBI annual report and one more report is sent to the Ministry of Finance by the governor. There are 2 annual reports they call, okay, in the RBI. Which are those reports and which sections of the Act provision it is being sent to them, sent to the Ministry of Finance?
Sir, I am only familiar with the annual report, so I am
Okay,
not sure which is
okay.
the
Okay. The
other
annual
one.
report sent by the governor.
Yes, I actually saw it in there in the first page that it is submitted to the finance secretary, but I'm not sure with the provision, which provision. I'm not aware of.
You must have seen the letter of transmittal.
Yeah, the letter of transmittal, yes.
So the annual report and the audited balance sheet of the Reserve Bank, these 2 reports, one, and they had 2 copies of the annual report sent to the finance ministry by the governor under section 53(2)
Sure.
of Reserve Bank of India Act 1934. The other annual report is report on trend and progress in banking in India. That is under section 36(2) of BR Act.
Understood, sir.
Under BR Act. Aneesh, I think the inflation is going through the roof now. The referral points and all, it's no longer, it is going beyond that.
Yes, sir.
There was an MPC meeting during 4th to 6th June.
Yes, sir.
Monetary Policy Committee bi-monthly meeting was there. Okay.
Yes, sir.
The unconventional meeting in May also the governor convened and they discussed. What are the main decisions taken in the June meeting?
Sir, the policy rate was extended by further 50 base points from 4.40 to 4.90%. So because of that, consequently, the marginal standing facility stands at 5.15%, and the lower limit by SDF stands at 25 points below. So that's 4.65%. And the repo
standing deposit facility 4.65.
Yes, sir, 6 point. It should be 25 base points below the repo rate, so it should be
Okay. 4.65.
4.65. And then the reverse.
Okay, this is the rates. Okay, they tinkered the rates to bring down the inflation and all that. What is the other important decision?
I think another important decision taken was to allow the UPI on credit card. I think that
no. That's okay. Now we are talking about the policy, no?
Policy decisions.
Okay, there is something called stance on the monetary policy. STANC stance.
Yes, sir. But I'm aware of that, but I can't recall what was decided in the meeting.
This is so for the accommodation stance, okay, on the monetary policy, which they are going to change now. They have a continued focus on that, the accommodative policy, okay, because it's not coming, and there is also an issue of time lag. Okay, if you take something, it takes some time to get effect. Yeah, yes, Aneesh. So the monetary policy we discussed, and there is a monetary policy transmission. There is a concept of transmission.
Yes, sir.
What is it, and how does it happen in India?
So, a monetary policy transmission is basically how the repo rate decided by the RBI gets transmitted to the formal financial system. So basically, how it happens is the financial operations department, or financial markets operation department of RBI undertakes operations in the money market to ensure that the weighted average call rate becomes almost equivalent to.
No, that is investment area. Talking about government securities. We are not talking about that. This is the credit market we are talking about.
Yes, sir, but the transmission happens through manipulating the weighted average call rates, right? Or maybe that's how I read. So
no, this is the lending rates of the banks.
Yes, sir.
They are adjusted to the repo rate. Policy repo rate is one of the external benchmark rates. Of the external benchmark rates. There are many external benchmark rates which the banks are free to take to link their credit or lending rates.
Understood.
Okay, that we kindly look into that. When is your interview, Aneesh?
20th August, sir.
Okay, 20th. Still some more time. Yeah. Kindly look into the RBI website, home and about us, etc. And what are the icons available there, the speeches, etc. Kindly look into that.
Sure.
RBI Act, okay, annual report, balance sheet, and budget to some extent you have to need to look into that. Okay.
Sure. Sir.
Last year there were questions about a Brexit. Okay. This year there could be some question on the Ukraine war, etc. How it affected the international trade and the exchange rates.
Understood.
Good luck to you. Thank you.
Thanks a lot.
Gopal sir will take the second part.
Hello, sir. Good evening, Aneesh. Okay.
Good evening, sir.
You are from Kerala, Changanur.
Yes, sir. I'm from Kerala.
And your last thing was IIT Madras.
Yes, sir.
So IIT Madras to RBI. Why do you want to come to RBI after having done something in IIT? Should you not look for, let's say, the Planning Commission or some such institution? Why RBI?
Sir, my major was in development studies and my minor was in economics. In addition to that, one of the subject apart from these two, one of the other subject I was really interested was international relations. So there are actually two seniors who are very close to me who had similar interests like me. So both of them actually took RBI as their career choice because they also felt that RBI is the perfect place where you can actually understand about all these three things and basically implement your skills in all these three subject areas. So naturally, I was also inspired and motivated by them to take up the same career path.
Which department of RBI do you think is doing something for development studies, or let's say your area of work?
Sir, actually, directly the RBI's Financial Inclusion and Development Department, but I think indirectly almost all functions of RBI supports India's economic development only, because ultimately the growth of the objective is to stabilize the economy, to maintain economic stability. So you can't have economic development without stability, right?
Okay. Now you're talking about stability so much. There's something like financial stability. Okay.
Yes, sir.
What exactly is the meaning of this financial stability? Because so many people talk about financial stability, etc. But what exactly it means?
Basically, protecting the investor, protecting the interest of the finance sector participants, and not just
Just that, protecting somebody, some sector's interest. Because
no, no,
government
no, no.
means everybody together. Okay. So what exactly do we mean? Does RBI mean by financial stability? Because it is set up a separate department called as financial stability
Yes,
department. As financial stability unit, it's become department now.
yes, sir.
Okay. So what exactly is this?
So basically, I think at the fundamental level, financial stability means that individuals should be able to do their financial planning in a predictable way in a very long run, in a
Hmm.
sizable horizon. Like for
Hmm.
example, if I am a retiree, like I'm planning for my retirement and I'm saving my money in a bank, assuming that 20 years later the bank would be able to give it back.
Hmm.
So and so that's why the individual is able to
Hmm.
trust the system to plan their life in a sizable horizon.
Hmm.
I think at
Hmm.
the core of financial stability, that's what it is.
So
Because
okay, fine. So you are talking about an individual, etc., etc. See, but financial stability broadly means orderly functioning of all the financial systems in the country. That's what it is in one line. If you were to put it, orderly functioning of all. Once you say orderly functioning, automatically all your these things are taken care of. As an individual, you should be able to have fair transaction in the investment market, fair transaction in credit market. So it's basically an orderly functioning of the entire financial system in the country. Okay.
understood.
We heard of something called the Basel regulation, Basel 1, 2,
Yes,
3,
sir.
etc. What are these basically?
So these are basically guidelines provided by the Bank of International Settlement based out of Basel, Switzerland. So they came up with first set of regulations in 1988. It was
Hmm.
reviewed later on in 2004 as the Basel II, and then post the global financial crisis, they came up with the third set of recommendations in 2010. So that is the Basel 1, Basel 2, Basel 3.
So what are the primary objective of this Basel people?
So basically, it is these are guidelines for risk management in the banking system.
In the sense, what do you mean exactly guidance for risk management?
So
They have to do something. Okay. What is that thing they were actually expected out of banks adhering to the Basel guidelines?
yeah, so basically, the fundamental idea of Basel guidelines is to ensure that banks keep sufficient reserves or take sufficient measures to protect them against both predictable and unpredictable events,
Hmm.
like keeping adequate capital,
Okay, that
keeping the
come to that point. So Basel 1 was primarily aimed at what?
uh,
Linking the assets of the bank, riskiness of the assets of the bank to the capital.
yes,
Yeah, that's why it came out with minimum capital adequacy norms of 8%. 8%. In India, we are in 9, but
okay,
as per the Basel Committee recommendation, it's 8%. Then we had Basel 2, which
understood.
brought in market risk
Market risk.
and things like that. Then Basel 3, now they come out with various other recommendations. So, what are the three major risks a bank faces?
So market risk, operational risk, and liquidity risk, and then default risk is also there. So
What is that?
uh,
Market risk, liquidity
market
risk.
risk, default risk, and operational risk.
These are the major risks you say banks are facing.
Yes, I think broadly these are the ones, but
What
there
is
can
the
be
inherent risk in banking?
a default risk, sir. That is the creditor may not pay back your money.
Default risk is an outcome of some other risk.
Operational risk.
No.
Uh, okay.
Credit risk, Anish, first and
Oh,
foremost risk a bank faces as an institution, lending institution is credit risk. The
sir.
default risk you are talking of is an outcome of the credit risk.
Okay, sir. Understood. Understood now.
So
Okay,
the
understood.
three major risks which the banks face, or let's say the four major risks is credit one, first and foremost risk.
Understood.
Next comes the market risk.
Okay,
Third, operation risk. Fourth is the liquidity risk.
understood, sir.
Okay. So
Understood.
that is what the fundamental risk is there. So relating the riskiness of the banks to the capital is all Basel Committee is all about.
Understood.
Most thing. Okay, now we are of course having the Basel III regulations, etc. Okay.
Understood.
Now you are talking something about repo rate, reverse repo rate, etc., etc. Okay.
Yes, sir.
What exactly this repo rate seeks to achieve? What are the difference between earlier? Remember, have you heard of bank rate?
Yes, sir, I have heard of bank rate.
It's still in existence. Bank rate is still in existence. Okay.
Yes, sir.
Have you heard of something called as CRR?
Yes, sir.
What is the CRR?
It's a cash reserve ratio,
What
basically.
is the purpose of this
Yeah,
cash?
yeah. So basically, it is to prevent issues like bank run, where the bank is required to maintain a part of their capital with RBI, their net with RBI as liquid asset, like basically as cash.
Part of their capital, you mean?
Not capital, sir. Basically, a percentage of their net demand and time liabilities with the RBI as cash.
Net and demand liability means basically what? It's a percentage of the deposit, right?
Deposit, yes, sir.
Okay, that's the thing. Okay, you mean to say this cash reserve ratio is only to prevent run on the banks?
And secondly, it also helps the RBI to basically regulate the money multiplier, or the the speed with which banks create money in the economy, so that it also helps in monetary policy in that sense.
Okay. So what is the approach there? Cash reserve ratio. Let's say I ask right now, what is the cash reserve ratio at
4%,
present?
4%.
Are you sure?
Yes, sir.
Okay, fine. So what is it? So it is a very gross policy, right? Suppose RBI increases the CRR rates, what happens? Every bank has to keep a certain portion of their money.
Yes, sir.
So a certain portion of the entire liquidity in the system goes and sits in RBI.
Yes, sir.
Money is sucked out. So I even if I'm a small fellow or a big fellow, I have to still keep certain amount of this thing. So that is replaced by what is called as the repo.
Yes, sir.
Okay, how does the repo work? Repo rate work?
So basically, repo rate. What happens in the repo rate is basically, you can crudely say that it is the the interest which RBI charges from banks for the loans which they take from RBI.
So that's the fundamental difference.
Yes.
CRR basically is a quantitative measure.
Yes.
RBI, if it feels the inflation is going up, a certain quantity of money is withdrawn from circulation, thinking that lesser amount of money in the market means lesser demand and inflation will come down. Whereas repo is manipulating the cost of money. If you make money costly, demand will become less. That is what was the intention. So that's the fundamental difference between repo-based approach and the CRR-based approach. Of course, RBI recently used both the tools together to contain inflation. It increased the CRR also. At the same time, it increased the repo rate at present. Okay. Okay. So have you heard of something called as call money transaction?
Yes, sir.
What is this call money?
So basically, it is the money which you borrow for an overnight. So basically,
Who borrows? Individuals can go and
basically the banks borrow from each other. So bank with surplus liquidity lends it to the person who wants it.
Can a non-bank be a participant?
Yes, sir. Yes, sir. I think primary depositories, and I think even sometimes mutual fund companies also becomes the seller of the money. In the sense, the lender of the money, I think.
All money is purely a bank money market for the banks. Okay, once upon a time, even life insurance corporation, etc., etc., they are participating. They are all now bought from. Have you heard of primary dealers?
Yes, sir.
What is their role?
So basically, they act as the agents who purchase the bonds and sell it to people.
When do they come into picture?
Basically, they come into picture when in the transactions of government securities. In the sense, when RBI issues bonds, they bid for these bonds, they purchase them and sell it to people in secondary market. From what I understand,
they are basically the underwriters. In case there is no demand for the paper, they have to buy the entire thing.
Understood.
And then later on distribute it to distributed market. As an individual, can I go and buy a government security?
Yes, sir. Now we can through the retail direct gilt accounts.
Okay, the RBI is the introduction of direct retail. Okay, okay, fine. Now, you know that RBI also is the regulator and the supervisor of commercial banks. Okay, besides commercial banks, which other type of institution does RBI supervise?
NBFCs and urban cooperative banks.
Urban cooperative bank. Okay, under which section of the Banking Regulation Act are these entities supervised? Any idea? Have you gone through the Banking Regulation Act?
No, sir, I have not.
You have to Anish. So
Sure,
make it
sir.
a point to read the Banking Regulation Act thoroughly, because once you talk about banking, then definitely this is an interview for RBI. They'll ask you on which section of RBI Act or BR Act do we supervise commercial banks. Okay.
Understood.
Commercial banks are supervised under Section 35 of the Banking Regulation Act.
Understood.
Non-banking finance companies are supervised under Section 53 of the RBI Act, Section 45 of the RBI Act,
Understood, sir.
45 of the RBI. Urban cooperative banks are also supervised under Section 35 of the BR Act.
Understood.
So can you tell me the difference between an urban cooperative bank or let's say a cooperative bank and a commercial bank? Because both are lending entities.
Yes, sir. But they both come into existence based on two different acts.
Both of
So
them lend. Some are-
yeah, because can you hear me, sir?
yeah, I'm able to hear you.
Oh, okay, great. So what I was saying is that both of them come into existence under two legal provisions.
Hmm.
Because one is and they were both under different regulators before RBI came into picture. In
Hmm.
the sense that the cooperative banks were earlier under the state cooperative registrar and
Hmm.
the state government, and RBI was only the supervisor.
Hmm.
But even now, the rural credit banks, rural cooperative banks, and primary credit societies are still under the state
Hmm.
cooperative registrar,
Hmm.
while the urban cooperative banks are come under RBI, but the commercial banks are fully under the
Hmm.
regulation of RBI.
Hmm.
Then their primary functions are also different because the scheduled commercial banks are typically universal banks. They undertake all kind of banking operations, while the cooperative banks were primarily intended for lending to primarily agriculture activities or sectors that could qualify as priority sector lending, from what I understand.
No, but what about urban cooperative bank? They don't lend to
They
agriculture
don't lend.
sector. They don't they
Yeah,
don't
but
lend.
but 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 they typically lend to their own shareholders. In the sense, the people who cooperate, they typically prefer to lend to their members, people who actually subscribe to their capital.
What is the fundamental difference?
Mhm.
So cooperative banks can lend only to their members, whereas
Mhm.
commercial bank can lend to any credit-worthy individuals. Cooperative banks are under dual control. Okay, so the management, the constitution, the board, etc., is with the state government, and registrar is responsible for that. And whereas in the case of a commercial bank, it's solely RBI. Okay,
Understood.
completely regulates the RBI. Okay, can you tell me something about the subsidiaries of RBI?
Yes, sir. We have the Deposit and Insurance Credit Guarantee Corporation of India.
Hmm.
Then we have the IFTAS, the Indian Financial Technologies and Allied Services. Then
Hmm.
we have the RBI Innovation Hub.
Hmm.
Then we have the BBR, the Bharat Reserve Bank, Bharatiya Reserve Bank, Not Mudran Private Limited,
Hmm.
and yeah, I think that's it. Four
How many
subsidiaries.
how many accounted
I
for?
counted four only, sir. I think there is one more.
There are two more. The six
Okay.
subsidiaries are RBI.
Okay.
One is IDRBT. Have you heard of IDRBT?
Yes, sir. The Department for Banking
Yeah.
Technology, something.
Yeah. And then there is something called as Reserve Bank Information Technology Inter Services. Repo.
Rebate, yeah.
So what is this role of this Bharatiya Note Mudran Nigam?
Sir, they print the currency notes. They have two printing presses. I think one in Mysore and the other one in West Bengal, I think. And they print currency notes.
Salboni in West Bengal.
Yeah.
Okay. And see, who prints this rupee one note?
I think the Securities Printing and Mint Corporation of India Limited. It's a central government company.
Okay. So what is the difference between 1 rupee note or coin and the 2 rupee notes up to whatever denomination is available now?
Because 1 rupee note is issued by the Ministry of Finance, signed by the Finance Secretary, whereas the rupee coin from rupees 2 till 2000 is issued by RBI and signed by the governor.
Okay. And any other difference between the two? Besides, what is this? Issuance, you're right. Government is issuing 1 rupee as well as 1 rupee notes, and the 2 rupees and above is issued by RBI, very correctly said. Any other difference?
Um, Sir, RBI is not allowed to issue 1 rupee notes. I mean, that's just the reverse of what I just said. I'm not up in this.
See, one is an asset in the RBI's balance sheet. The rupee coins are all assets.
Yes, I understood. The other
Bank notes
currency comes in liability side, yeah.
are all liabilities to the Reserve Bank of India. Okay.
Understood.
Now, as a matter of right, can you walk into RBI with a torn note or let's say a mutilated note and get it exchanged?
Yes, sir, we can. Uh, I think yes, but I think RBI does it through banking system,
It does it
but
through the bank system, that's right. But
but
as an individual, can I do
yes,
it?
yes,
It's
I
only
think I
it's a,
think it's their provisions are there and legally allowed to do so.
it is not obligatory on the part of RBI to exchange because it's a matter of grace. The
Okay.
Reserve Bank of India may frame rules to
Okay.
decide as to what type of notes what type of mutilated or cut notes can be exchanged. Otherwise, there's no obligation in the act.
Understood, sir. Understood. Now
No
understood.
obligation in the act. Okay. And see, to any remote part of India you go, you can definitely find currency, isn't it? You
Yes,
can
sir.
get a currency note. Anywhere you go, you can get a currency. How does RBI? Because RBI is not everywhere, that you are sure. It's
Yes,
there
sir.
only in state capitals.
Yes, sir.
How does money reach these remote corners?
RBI issues it to the bank system, and from the banking system, it reaches the ATMs or the other,
But they also must be having huge places. No, how does it? When you say RBI issues it to the banking system, how does it manage? Will the banks have the capacity to have such tons and tons of notes and rupees like RBI has in its vaults?
I
What is the mechanism through which RBI reaches currency to the remotest parts of the country?
Sir, I mean, maybe I can share a personal observation that I have seen these armed, this vans
Yeah,
through which
that's
currency is
fine. But
transported.
then it has to be kept somewhere, right?
Yes, sir. I have seen big buildings in Chennai where they keep currency, but
Hmm.
I mean, I'm not really sure about the mechanism, but I've seen buildings with huge walls.
But have you heard of something called as currency chest?
Yes, sir.
So the banks have something called as currency chests. They are the responsible for the money inside that. But the money inside those currency chests belongs to the Reserve Bank of India.
Okay, sir, understood.
Okay. So these currency chests are set up in different locations in different districts, etc., by the bank. The banks have to come to RBI and ask for currency chests. Depending on the ability of the bank, its financial position, etc., currency chests are given. Money is basically moved into this currency chest by these trucks or vans which you have seen.
Understood,
Okay,
sir.
so remote location. From there, the money gets distributed. But the
Understood.
money inside is purely Reserve Bank's property, which is being
Understood.
safeguarded by this bank. That's all. So the currency chest mechanism ensures money reaches the remotest corner of the country. Okay.
Understood.
So now we have different methods of payments. Okay, payment called as payment and settlement systems. Okay. Under this, you have something called RTGS, something called NEFT,
Yes, sir.
something called IMPS. Then you have what do you call ECS? What are these things? What is RTGS, NEFT, ECS? Hmm.
So basically, those are payment systems through which
Hmm.
the currency transfers from one bank to another. In the
Yeah.
sense that the communication happens from one bank to
What
another.
is the difference between RTGS and NEFT?
So as a RTGS, the minimum it's a high volume transaction system in which the minimum amount has to be 2 lakh, and I think SBI allows up to 2,000 crore transaction.
Okay.
That's a real time.
Volume wise, okay, agreed. It's a volume transaction. What any other difference?
It's a real time settlement, whereas NEFT is
What is
a
it? It means when you say real time settlement, what is this real time settlement?
uh,
What does
that
it?
means that means that moment I initiate the transaction, the other person's account will be credited. But
Okay.
in NEFT, there is a slight delay of 30 minutes, around 30 minutes.
One is the net settlement system and this is the gross settlement system. Okay.
Yeah.
RTG is basically a debit push transaction. Instantly, money is debited into your account and passed on. The credit is passed on to the customer. It
Understood.
doesn't wait for any other netting. It's a
Understood.
gross one-to-one kind of a transaction. Whereas NEFT happens on netting and it happens at periodical intervals. Electronic clearing service. What is that electronic clearing service?
I'm not familiar with that system, sir.
It was one of the first and foremost things which we started when the payment systems sort of developed in India, ECS. You sometimes give standing instructions to the banker. Have you
Yes, sir.
given standing instructions
Uh,
electronically? You told him that automatically on this particular day, so much of money has to be transferred. Similarly, the companies which are paying dividend to their shareholders, how do they do it? They give standing instructions to the banker to distribute the money to so and so person. These are all electronically cleared. Okay.
Understood.
Anish, you've done well. Okay, so but
Thanks.
I would suggest you should be thorough with the Reserve Bank of India Act as well as the Banking Regulation Act. Very important. Most of the people, since your specialization is development, economics, etc., you should have a sound legal backing for all this. They are going to ask you on which section RBI supervises the banks or
Understood.
inspects the bank. Okay, and who are the other supervisors and regulators, and what RBI can do and cannot do.
Understood,
Okay,
sir.
in the preamble of RBI Act. Okay, what does it say? And
Understood.
how does RBI manage to do all this? So these are the questions that are generally going to be asked. Okay. So now I think the time is up. So we will stop at this time. Raja sir, if you got anything to tell Anish,
I think sir is not here.
I think he has left it. Okay. Okay then, Anish, all the best.
Thanks, sir. Thanks, sir.